And we are back talking about Equity Bank, 10% earnings growth. What does this mean? Where is this coming from? Before we took a break, we'd actually articulated the case for some of the regions that they're in. David Kingóo is an investment analyst at Cytonn, and as we were taking the break, he was very sure to highlight the element of opportunity and rather upside that this bank is sitting on in two key markets, that is Rwanda and DRC. We want to understand how will this bank be able to optimize this opportunity in this market. Now, David, mobile banking, internet banking, what's happening there when you look at equity? And for our benefit, I think our graphics team can put up the next chart.
So definitely what's happening is that, number one, is an avenue for deposit. When we talk about mobile deposit account. So the bank has been able to get around 340-something billion through mobile banking.
Wow.
Through people who were able to place
This
deposits.
is just deposits alone.
Definitely
over 300 billion. Over what duration is this?
That's about between 2018 Q4 and 2019 Q4.
Wow, in 1 year?
In 1 year.
Okay.
So we've seen a lot of aggressiveness in terms of the bank opening channels for lending through mobile bank. And we've seen they're saying around more than 50% of their loaning numbers have come through mobile lending. Mm-hmm. So it's an avenue that the bank has seen a great potential in it, and what I said about innovation initially.
That's very interesting, because for Lisa, the numbers that we've had for about 6 months, 140 billion.
Definitely.
So this is a bank that has done 300 billion. So does this become the future? Do we see all the assets and liabilities that are more or less sitting on the bank's balance sheet, which means they're sitting in some vaults somewhere? Do we then see this moving to the mobile phone? And how do we look at that and security?
So definitely, as I would mention, and I've mentioned earlier about fintech, because I've seen people getting loans through mobile banking, and we've seen many firms that have grown through mobile lending. So the future in banking is out of the banking hall. Then we do the simple research. About 3 people, 1 person has never gone to the bank for the last 6 months. Yes. So they've been transacting on the phone. So there is a lot of future in technology in terms of banking, because when you get your money, you put in the bank through your mobile app. When you want to withdraw, you withdraw through your mobile app. When you want to get a loan, you go to the Easy Bank and get a loan.
Okay.
Yes, and the same as investment banking aside, on your product that are definitely through.
You're also
the phone.
pushing. Okay.
Sure.
All right. Then an interesting statistic that they also did bring out, and we haven't put that up. 7% of the transactions are now done at the branch, 93% done on the phone. But when it comes to value, it's the opposite. I think the value of transactions that largely sits in the bank, and the lesser value on the mobile phone. So is this a trend that we expect to see? Could we see 100% of the transactions actually done on the mobile phone in, say, less than a year?
So because of some conditions and security issues that are there as a regulation in the government and the banking industry, because of large cash transaction, most of the cash that is coming to the banking hall is corporate cash, is cash that is want to do international business, but the current transactions cash come through mobile banking out of the banking setup. So the trend will keep growing as technology tends to assume and tend to adopt security in terms of cash transactions. Then we'll see an increase in the limit that someone can transact through mobile banking. Then we'll see most of the chunk that is done through the banking all coming into mobile transactions.
All right, fine. So at least we have a strategic overview. So this is a bank that's earning almost 25% of its revenue from its subsidiaries. You see a lot of opportunity in DRC as well as in Rwanda, and this could possibly go to 50% maybe in 5 years or so. This is also a bank that's leveraging on financial technology, largely using the mobile phone as well as internet banking to drive its next phase of growth. Now let's come back to the numbers, and we want to now delve into the income statement as well as the balance sheet, trying to look at the cost of funding and the revenue that they're earning from this. They did mention yesterday, Dr. James Mwangi did mention that he's able to generate 10.8% with regards to asset yields, and he thinks even in a rate cap environment, when it was still there, he could improve this to about 12.8% or 13% by reallocating funding from the government of Kenya to the private sector. What are your thoughts on the cost of funding and the net interest margin that this bank is able to generate?
So definitely with the interest scrapping off, then the cost of lending will come down. Then we're trying to see where is the biggest loan book coming from in this particular banking. So when you try to move into corporate lending, into large companies and corporate lending, then the cost of borrowing will come down because of the size of the loan book. So we see a lot of aggressiveness into that. But this one may not be the case. Of course, the market would turn around in terms of cost of lending when it comes to the interest rates capping off. So it's going to be more positive as we move forward.
Okay. All right. So I think we can go to the next graph that just gives us the balance sheet from our graphics team. As they put that up, let's look at the evolution of the income statement. Revenue growth. Do you have a sense of what the key drivers are? Our graph, that's the next chart after this chart, where we're talking about the balance sheet and the income statement. Okay, as we wait for that. Net loans, we did see 21% growth. What was happening there on net loans, on cash and cash equivalents up 40%? Lending to the government up 5%, which brought out 21% growth in total assets.
Sure. So definitely because of the loan book has been about the quality of the loan book. Sometimes the growth of the loan book is affected by the quality of the loan book. So they've been able to push a quality loan book out there. Definitely because with the less provisions, which comes as a cost of lending and ensuring that the default rate is quite low.
All
so
right.
that has seen the growth of the loan book because the quality has been maintained and we have been lending to customers that we trust, customers that have an history and customers that are solid and customers that have experience in business when you mention about corporate, definitely.
Okay.
Sure.
So when the company says, when Dr. James Mwangi says he has a chest with 300 billion that he can push into the Kenyan economy, does that excite you as a shareholder? I want to believe you are a shareholder. Or does that make you scared? Because if he has 300 billion, what do the other banks have?
So definitely, when you mentioned that when you chunk of good deposit that is there, as I said initially, it is money that the public have trusted you with it. Then you don't have an option other than looking into the best ways of investing this money. So with 348 billion ready to chunk out with the interest rate scrapping, and market forces trying to be positive for the commercial bankings, then we are in a good position. The bank is in a good position at that particular stage.
But you know what I keep saying, David, when I look at it, it's one thing to know there's excess liquidity sitting there with the banks, and if they could push it out. But when you look at the budget statements, year on year, the government borrows about 300 billion.
True.
So the question is, can the private sector take up what Equity has, what KCB has, what Cooperative has, what all the other banks have?
Sure.
What's the absorption capacity?
The main driver is through loans.
Yes.
Definitely to the private sector. But now, of course, we've seen the challenge that I mentioned still, the interest rate capping was the driver and it was not moving.
Okay.
So now with the interest rate capping and interest rate now determined by market forces,
okay,
then we see a lot of that
out
in the market, and monetary policy effectiveness will be seen.
Okay, what do you mean by monetary policy
So it means
effectiveness?
about how money goes into, in the layman's language, how money goes into the public. So one of the options through the commercial, through the central bank, through commercial bank, through lending.
Yes.
So definitely because commercial bank and central bank and commercial bank will not chunk out money because of the interest rate and because of the risk model that we're using to loan. But now, because it will be positive, because now it will be determined by the market forces, definitely we see positive in that, and then translate into efficiency in the market, monetary policy.
All right.
Sure.
Maybe my second last question before I open it up for your comments in case we've missed out on that. 10% growth as of yesterday for third quarter 2019. Should we expect 20% in third quarter 2020?
So with technology, number one, then with interest rate capping, then we would expect to be there.